Hello guys, how are you? I hope everyone is doing fine. So in this video, I'm going to do the prediction for of principles of accounts. Okay, this is the Examination Council of Zambia. So I'm going to do a prediction. I'm also going to show you the accounting cycle from a transaction when it is taking place up to the trial where we extract the trial balance. Okay, from a transaction, books of original entry, transactions, source documents, books of original entry, ledgers, then trial balance. I'm going to explain all that. And also, after the trial balance, I'll explain on the final accounts. Okay, final accounts, that is the trading and profit and loss account, or the income statement, and the statement of the financial position of the business, which is the balance the balance sheet. And I'll also talk about few things, okay? Adjustment in the final accounts. Those statements or information that comes after the trial balance. When you are supposed to prepare the income statement, the trading profit and loss account, there is the additional information of the closing stock, accrued expenses, okay, prepaid expenses, paid in advance, drawings, okay, capital, interests, something like that. There are a lot of them. Depreciation, okay, of fixed assets, a lot of them. So let me explain a few of them so that you understand as you are writing your principles of accounts, as you're preparing for your principles of accounts exam. All right, so let's jump right in. Remember to subscribe and like the video if this is helpful to you. Okay, so principles of accounts is divided into two. This is ECZ. Okay, is divided into two. Paper 1 and paper 2. Paper 1 is 40 marks. Okay, 40 marks. Then these are multiple choice questions, of course. 40 questions. Okay, multiple choice questions here. So I'll not waste the time here. Multiple choice questions, and usually all questions from all topics come. Okay, from all the topics, most of the topics come here on paper 1. Let's go to paper 2. Paper 2, my friends, is 100 marks. 100 marks. Then this paper 2 is divided into two sections. There is section A and section B. Section B. Okay, so this is where I'm going to explain. Please, let's travel this journey together. Okay, it's an interesting journey. Let's start with section A. What is there in section A? In section A, you should understand first what a transaction is. So let me explain the accounting cycle here. Let me explain from this side, since this is just multiple choice questions. Let me explain the accounting cycle so that you understand. Accounting cycle. I believe you were taught this before you write your exams. Or if you don't know this accounting cycle, you think accounts will be challenging to you, okay? Because the accounting cycle is the way to go. Now, accounting cycle, in simpler terms, you should start with a transaction, okay? Transaction. From a transaction, you have source documents. From source documents, you have journals or subsidiary books or books of original entry. Books of prime entry or original entry. Let me just write prime entry. From books of prime entry, you have ledgers. From ledgers, you extract the trial balance. The trial balance. Let me start with the first one. So in section A, the first question usually is on transaction and source documents in the books of original entry or prime entry. Let me explain here. For trade to take place, a transaction has to what? Trade is an exchange of goods and services. The proof that a transaction has taken place, there have to be two accounts. Okay, the one who is receiving, who is the receiver and the giver. You know the golden rule, okay, of bookkeeping, the golden rule. The debit the receiver and the credit the giver. Okay, for a transaction to be deemed correct or complete, there has to be two accounts have to be opened. The one that is receiving and the one that is giving. Are we together? Okay, so for instance, let me give you this example. Bought machinery by cash worth let's say 20,000 kwacha. 20,000 kwacha. Number one, this is a transaction. There's a transaction. Okay, so you need to identify two accounts. Two accounts. The one that is giving and the one that is what? Receiving. So one of the accounts here we can't write purchases. We know what we bought. So we bought a machinery. So you should open a machinery account. What else? And a cash account. We didn't use bank or credit. So you have machinery account and what? And cash account here. So you should know the book where we record cash transactions. Okay? Where we record what? Cash transactions. So these are transactions. Okay? So what is the source document? What is the source document for a cash transaction? Cash transactions, there are a lot of source documents. You have receipts, check counterfoil, deposit slip. Okay? So those are for cash transactions. Cash transactions, since this was cash, not credit. All right? Now, the book where we record, the book of original entry or prime entry, is the cash book. The cash book is a book of original entry where cash transactions are recorded. Are we together? Where cash transactions are recorded. Hear me very well. When that transaction is recorded in the cash book, after that you need to post to the ledger. Okay, you post to the what? To the ledger. From the ledger you extract the trial balance. Now, what if you bought machinery on credit? Where do you record the information? Okay, you should know the source document and the book of original entry where you record that transaction. Are we together? So you have sales day book, sales day books, purchases day books. You know those purchases day books. The other name for sales day book is sales journal, by the way. Purchases day book, purchases journal. Then there are instances where you bought something, then you discover that it's not the one that you intended to buy. Okay, maybe due to wrong description, wrong color or sizes, or maybe goods may get spoiled whilst on transit. So you may decide to return them. So that is the purchases returns day book. Okay, so that transaction is prepared in the purchases returns what? Day book. Okay, purchases returns day book. Now, you also have sales returns day book. All right, if you're the one who sold something, then people returned goods. So you're supposed to record. Okay, so that's so amount of goods were returned due to so. Are we together? Okay. So petty cash also, that's where you record the petty transactions. So I think that is the issue. Now, a cash book is the only, let me just say, only book of original entry that is both a a ledger and a book of original entry. How? Because there are some transactions whose double entry book system end in the cash book, like the contra entries. The contra what? Contra entries. Okay? Contra entries. Contra entries when you deposit money, well, for the bank, for the business, okay, we deposit money into the bank. So you're supposed to have two accounts. You're supposed to have two accounts. You have bank and cash. You start the one that is receiving, like the bank. When you're depositing, the bank is receiving, so it'll be bank stroke what? Cash. Then in the folio column there, you write C to indicate contra entry. Then what you need to know is that bank will receive, so you debit bank and credit cash in the same what? Same line, on the same date. That is a contra entry. Another contra entry is when you withdraw money from the business, okay, for you withdraw money from the bank for business use or office use. That is a contra entry. Don't mistaken business use and personal use. Business use and office use, it means that the purpose of that money you are withdrawing is for the business. Maybe you want to buy more stock. Are we together? You want to buy more stock. But for personal use or private use, you may withdraw money from the business for private use. Maybe you want to buy meal, or you want to buy fertilizer for your mom or your grandparents who are in the village. Okay? That money is not yours. Even if you are the owner of the business, you need to take it back. That's why they are called drawings. Are we together? Drawings, this is the money or items withdrawn from the business for personal use or private use. Okay? You need to return that money back to the business. Okay? So don't just eat money anyhow from the business. This is my business, this is my business. No. That's why it is advisable when the business is now doing well, put yourself on a reasonable salary. Okay, so that to minimize withdrawing money from the business unnecessarily. Are we together? So that is not a contra entry. You write in details as drawings. Okay, and we deal with it separately in the financial position of the business, under financed by their capital, net profit or net loss, liabilities, then the drawings. We subtract the drawings so that we know your capital in that business, capital employed. Okay. Now, listen, and listen very carefully. You should, like I said, you should know the source document. Source document for a sales day book, source document for purchases day book, source document for cash book, source document for purchases returns day book, source document for sales returns day book, source document for petty cash. You should know those. Now, listen. Since this is the accounting cycle, so you should know how a transaction, from the transaction here up to the trial balance. A trial balance is not an account. You should know that. Trial balance is just a list of totals that are in the debit and the credit side of a trial balance. Okay, it's not an account. You just have, the purpose of the trial balance is to check the arithmetic accuracy of the accounts, the ledgers, and the books of original entry. If you've entered a transaction correctly. If you enter a transaction wrongly in the, let's say in the cash book, in the ledger you're going to enter it wrongly, and in the trial balance automatically you're going to put, maybe if you don't know the rules of preparing a trial balance, you may put it on the different side. Okay, if you don't know the rules of preparing the trial balance, you may put it on the different side. Okay, so let's go to the trial balance itself. Trial balance, you should know the issue, this rule, okay, or alleg. Okay, so this R, this is for revenue. Okay, this E expenses. This A, assets. L, liabilities. Now, in the trial balance, we have debit side and the credit side. Hear me nicely. Revenue or income. Revenue or income, example, discount received, commission received, okay, something received. Those are examples of what? Income. You credit, okay? Revenue, we credit. What else do we credit? Liabilities. Liabilities, we credit, okay? Expenses and assets, we do what? We debit, okay? Examples of expenses, we have bad debt, wages and salaries, motor expenses, office expenses, okay? To mention but a few, maybe even electricity bills, water bills, something what? Something like that. So make sure you know this, okay? It's the same as ALEG, okay? This is assets. So assets like this, assets and expenses, you what? You debit. Liability and gains here, or income or revenue, you what? You credit. That is the trial balance. Now, there are situations where the trial balance fails to balance, even if all the transactions are okay. It fails to balance. So this is now where you look at the errors in the trial balance. Errors in the trial balance, to check for errors in the trial balance and correct them. Okay, and correct them. So you should also look at that trial balance is there. Okay, trial balance is there. You should know how to balance it. Sometimes it's 10 marks or 7 marks. Okay, it depends. Now, the other issue that you need to know, you should know uh, you should know assets. Okay, you should know assets. There are two types of assets. There are fixed assets and current what? Assets. Now, on fixed assets, you have different fixed assets. Okay, land and building, machinery, premises, fixtures and fittings, loose tools, a number of them. You think you're familiar with those. In current account here, you have the stock, which is usually the closing stock. Okay, stock, debtors. Okay, debtors. These are basic current assets. Debtors, cash at bank, and cash in hand. Okay, so these assets, where do you take them in the final account? In the balance sheet or statement of financial position. Okay, under current what? Current assets. These current assets. Then fixed assets also in the balance sheet. They're the ones that we start with. If that one we are preparing a sole trader. Okay, so trader. Okay, you should also know, my good friends, liabilities. Liabilities, we have short term and long term. So short term liabilities, most of the times, usually you have creditors, bank overdraft, bank overdraft. Okay, long term liabilities, you have maybe loan, like mortgage, loan from any bank. Okay, those are examples of long-term what? Long-term long-term liabilities. Now, you should know that part as well. Okay, my good friends, you should also know types of accounts. Okay, types of accounts: real. Let me start with personal, real, and nominal. Nominal accounts. Okay, nominal accounts. Now, these accounts, listen, Personal accounts are accounts of persons, debtors and creditors. Okay, it also includes names of organizations or firms, businesses. Example, let's say Sharon's salon. Okay, salon. Okay, maybe J&J Transport Company. Okay, Lafarge Cement blah, 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 Ltd, Zesco Limited Company. Those are personal accounts. Those are personal what? Personal accounts. As long as it bears the name of a company or the name of a person, those are personal what? Personal accounts. Know how to classify those. Are we together? Know how to classify those. Then nominal account. Nominal accounts are accounts of income and expenses. Just know income and expenses. That's all. Income and expenses. Those are nominal accounts. Okay? Nominal accounts. Then what are real accounts? Real accounts are accounts of assets. Accounts of what? Assets. Okay? Assets. So when you are told to classify, maybe let's say, classify the following items under the correct heading, real, personal, and nominal accounts, you should be able to know that real, you look for assets, assets under real, personal, names of people or companies. What's this other one? Nominal accounts, expenses and income under nominality, nominal account. Are we together, my good friends? So, another info that is important, very, my good friends, is that look at the depreciation of fixed assets. Depreciation of fixed what? DEP, let me just write DEP, depreciation of fixed assets. All right? You need to know the different methods of calculating depreciation. Depreciation is the loss in value of that fixed asset over time. Okay? You have different methods of calculating depreciation, reducing balance method, straight line method. Okay? So you need to know how to calculate that. Not only that, you need to know the causes. What causes an asset to depreciate? What causes an asset to lose value? What causes an asset, for instance, a motor vehicle, to lose value? Okay? Is it wear and tear? Okay? How about an asset like maybe land? Can land lose value? Does it depreciate or appreciate? Are we together, my friends? Okay? Not only knowing that, know also how to prepare the fixed asset account. Like let's say machinery account. Machinery account, you should also know how to prepare the disposal account. Okay? The disposal account. Are we together? Okay? We're still under section A. Section S, sometimes you should know this, guys. This question usually comes. Bank reconciliation. Okay? Bank reconciliation. What is the bank reconciliation? Remember, when you open an account, a bank account, so you will be preparing, you'll be writing the cash book, okay, transaction in the cash book, okay, as well as the bank will prepare the bank statement, okay, the bank statement. The bank reconciliation, this reconcile the balance, the cash book balance and the bank balance there in the bank statement. So that the transactions in the cash in the bank statement agrees with those that are in the in the cash book. Are we together, my good friends? Agrees there. Now there's some times where they do not agree. For instance, situations where those transactions do not agree. Because here, the amount in before I give you the reason or situation where they differ. and you need to reconcile. There's some times where the cash book balance is greater than the bank balance, or the bank balance is greater than the cash book balance. Situations like, let's say you pay someone using a check, and that check has not been presented to the bank for payment. Then that month, that period, like a month ends, because the bank statement is issued monthly. Okay, so this person in the cash book, you may, what's happening here? Okay, so the cash book will reduce. Okay, but since here it reflects that that person didn't what, he didn't present the check for payment. Here the it will increase. The bank balance will still what, higher. So the bank balance will what, increase here. Now sometimes there are people, there are some businesses, maybe you invested in some certain businesses, then they decide to pay you using maybe dividends, commission, using the bank. So that has not reflected in the cash book, but in the bank statement it's reflecting. So um, the bank statement may increase, then the cash what, or may increase, and then the cash book may still be lower than the balance in the bank statement. Those are some situations where we prepare the what, the bank reconciliation. The other one, maybe you may, sometimes bank charges. Yes, bank charges, they may reduce money here. They just deduct, but in the cash book it will not reflect. These are some of the situations where we prepare the what, the bank reconciliation, dishonored checks, to mention but a few. Now, how you prepare the bank reconciliation, I believe you know, because you may find it there. The bank reconciliation, you may find it there. Okay, so know the bank reconciliation. Okay. The other information which is very critical, guys, that you need to know or go through in your notes or books is this one. Capital expenditure. Capital what? Expenditure. Not only capital expenditure, but you should also know capital receipt. Receipt. Okay? Then you have revenue. You should also know revenue expenditure. Examples of revenue expenditure and the revenue receipts. Revenue what? Receipts. Okay, no examples of capital expenditure, capital expenditure, capital receipts, revenue expenditure, revenue receipts. Like I said, that you should know examples of real accounts, nominal accounts, and the personal what? Personal accounts. Do the same with these. Okay, those are just some of the items that you may come across with tomorrow. Okay, now section B, there are usually two questions and you're asked to write how many? One. Section B. Okay, so in section B, usually the two questions. By the way, in section A, there's sometimes where they bring two questions, you answer either of them, one of them. They say answer this one, either this or this. In section B, usually common questions that usually come in section B, you have the final account. Okay, final accounts. Now, final accounts here, you may have that of a sole trader, sole trading, okay, partnership, uh-huh, partnership, okay. Other things that we may come across with, manufacturing accounts, manufacturing account, and also what's this? non-profit making organizations like, subscription to clubs, okay, let's say non-profit making organizations. Okay, making organizations, non-profit making organization. So the easiest of these, I may say, it is the sole trader followed by the partnership, manufacturing account, the non-profit. All of them are easy if you know them. But since if you have a challenge with them, so if it's a sole trader that is coming, this is very simple and straightforward. What is confusing when it comes to a sole trader, it is the additional what? Additional information. Additional what? Information. Now, additional information here. Still on partnership, we may have additional information. Manufacturing account, additional information. Okay? Additional information here. Know this. This is where you find prepaid, prepaid expenses. Okay, prepaid expenses. You may also have prepaid income. Prepaid income. Okay. Owing expenses. Expenses. We may also have owing income. Okay. So examples of owing here, you may have it is outstanding. Okay. Outstanding balance, maybe outstanding. Okay. Or arrears. 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 What else is used? What else is used to refer to owing here? Okay, so prepaid, it is paying in advance. Okay, paying in advance. Paying advance. You should know those. Depreciation of fixed assets. Okay, drawings. So that is additional information. By now, I think you should know them. I think accounts. I think accounts. That's so. I think that's so. When it comes to principles of accounts, remember, know the accounting cycle. Go through them. Go through the transaction, source documents, books of original entry, then ledgers, how to prepare those books of original entries, the income, the examples. You have petty cash, know how to prepare the petty cash, know how to prepare the 3-column cash book, the 2-column cash book, know how to prepare the journals like sales journal, purchases journal, okay? And also know how to post to the ledger and the examples of ledgers. Trial balance, you should know how to prepare the trial balance. You should know how to prepare out the final accounts, all right? Yes, to mention but a few, and there are a lot of things that I've explained when it comes to principles of what? Principles of accounts.